Well, welcome back, everybody, to Be the Trader. Today, I have a very special guest. It's someone you probably already heard of from a recent conversation he had with SMB Capital, Mike Bellafiore. But I wanted to talk to him myself and have a good conversation today with Scott Elliott. Scott, welcome, first time I said welcome back. Welcome to the show, man.
Thanks, Alex. Thanks for having me on.
Absolutely. I first off, I'm bringing you on, and in all transparency, is I was really inspired by what you shared on that interview or conversation, whatever you want to call it, because it takes a lot of self-awareness to kind of see what you went through, and then when you share that with others, it can really put a whole different light on trading, because everyone just shares one side of it, which is our wins, right? And they don't really show the losses that we take. So I really appreciate you sharing that. And that's why I wanted to talk to you today. And before we dive into that and go forward to where you're at right now, because I really want to know how things are now, can you give me a little bit about your background, and if you can give it in a short segment of what got you into trading and up to the point of your mic conversation?
Okay, so basically I've been trying to actively trade since 2012 is when I started really trying to learn about it. And the first time I can remember like even getting interested in trading was during 2008, 2009 timeframe. I was living with my girlfriend at the time in an apartment, and my dad was doing some trading, and he was trading in a fertilizer company. I don't remember the name of it, but they were pretty hot back then. And I remember watching the stock, and the stock, my dad was up like 10 grand at one point during the day, and we were excited. And by the end of the day, it was gone. And I thought, man, that's a lot of money, right? Like I was like, that's pretty. And so in my mind, I was like, wow, you can do well in the stock market, if. And so, but from that point on, I was in engineering school, and I graduated from engineering school and became an engineer. And 2012, I forget, I don't know what it was, but I started wanting to learn. So I started reading books about trading, Market Wizards, Jesse Livermore, if you know about his history, all the big blowups and massive wins he's had. And so I just started reading about that and trying to learn how to trade, and started taking some education. It took me a couple of years kind of doing it on my own before I tried to learn from someone. And then I took a course from Keith Kern, if you know who he is on Twitter.
No, sure.
Trader's Toolbox. He has pretty good service. And so I kind of learned his strategy. Basically, it's a long bias strategy, buying breakouts. And, it made sense to me, and I was actually starting to become profitable. And so about 5 years in, I remember I got to a point where I was like, okay, I can consistently make money. Like it was, it wasn't a lot, but it was something clicked. And from what I understand, most traders, it's anywhere from 3, sometimes longer than 5 years. But there's this time frame where you start to know, okay, I know what to do to make money. And so at that point, I started making some money. 2014 was an interesting year for me. That was a year where the marijuana penny stock started really taking off. And I remember the one in particular I was involved in was PHOT. And I had like $2,000, and I bought into this stock, and it ran all the way to, I don't remember what it was, 15 cents to 75 cents or something. And I was up like 50 grand. And at that point, I was still in the position. The SEC started halting them. And before you know it, 50 grand's gone. But I had tasted an element of success, right? So I had done some things right. I'd caught a big momentum run, but I didn't know when to get out, and I didn't know what I was doing. So the next year, I kind of, I just kept grinding away, making some money, some pretty decent money. I think the next year I turned maybe 2,000 into 35,000 or something like that, just steady, long bias strategies. And so I think the next important thing to talk about was, I think it was late 2018, and I think there was another marijuana stock run. And the stock in particular, well, let me go back a little bit. I was almost always long bias and never short. I was never short. I was afraid to short because I didn't understand. I was just afraid of it. Mm-hmm. But I always seen these big monster moves and thinking, man, this thing's going to crash. And I just never had the courage or whatever it was to actually kind of dip over to that side. So the first time I did was IGC. I think it was late 2018. Went from 2 to 14, I think is what it was. And I shorted it at 14, and it crashed to, I don't remember what it was, 7 or something in one day. I don't remember. It was like a couple days, but I really did well, and I was like, wow, this is cool. Like, you can make some good money on the short side. So that kind of got me interested in kind of learning about the short side of trading. So then I started listening. I found guys, Investors Live, and some interviews he did with Phil Godecker, who that's his primary strategy. So I really started learning, what are these strategies? What are these guys doing to capitalize on the short side? So that's kind of, I went down that path. And 2019, almost all of 2019 for me was short selling. I don't think I may have made a few long bias trades, but almost everything was short selling. And I was doing very well. I did very well up until like the summertime. So I built my account up at that point to a little over $100,000. Just basically short selling the pumps, that are obviously pumping it to dilute their stock. You know what I mean? And you look at the chart. You can tell the chart has no institutional owners. It's just down, 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 pop and drop, right?
Yep.
Small cap, low floats. You know the game. And so everything was great, right? So one day I wake up, I'm at work, and NBY is at 30 cents and jumps up to, I think, $1.20, right? This is, and so whatever, it's like 200, 300% up on the day. And I'm like, okay, let me get some shorts, short this thing, right? So I'm shorting it at like $1, a little over $1.20, and I got like 10,000 shares or something. And then it goes against me, and I'm adding on this thing while I'm at work. And before you know it, I'm 40,000 shares short. And by the end of the day, it's like 350. Okay. My broker stops me out the high of the day, and I'm wiped. Just completely blew my account. And I'm like, what did I just do? Like, how did that just happen? And I'm so upset, kind of shocked about it. Yeah. But then I kind of just said, okay, what did you do wrong? And what I learned, and I should have learned this with Codex, right? So I made kind of a very similar mistake. NBY was less than 10 million market cap. So it was, I don't know, maybe 5 million market cap when it started its run. And, 1,000% on the day is not normal, but it can happen. And if you short into these things too soon, this stuff can happen to you. And so I just started grinding back, still short selling, doing all that, right? So by the end of the year, I'd made up all that profit back. And going into the next year, here comes the coronavirus stuff. Yep. And I'm shorting into this Codex. I'm looking at everything they're doing. They're putting out all these fluff PRs. I don't know how many PRs they put out, 10 in a month. And they did, 2 offerings. And I'm like, okay, this is typically how these things work. They put out their offerings, and eventually they don't support it anymore, and it crashes. And the coronavirus was just way bigger than I thought it was going to be, and probably everybody, because it killed the market. And shorting Codex is kind of like shorting the VIX at this point, or any of these names, right? So, and it just blew right through me. I did the same thing. I shorted it, added on it when it broke, and, end up blowing up again, right? On the same kind of stupidity of microcap, oversizing, and just not. And there was times where I could have got out of the trade, right? I could have got out with some decent profit on the trade, but stubbornness. And this is a very similar thing, and I think if everybody looks at their trading, you're probably going to see some similar themes that are recurring. And if you can pinpoint those and stop yourself from doing that, you can prevent those in the future. But it's a human weakness of ours that we do our best, but it's just human nature that we, you have to constantly battle those type of things. So that's kind of where I was at. And, I started back trading since then and doing pretty good. Not great, but pretty good. The market's been a little rough lately, but I know that if I'm patient and I wait, I know when the best trades are going to present themselves, and they're, I don't want to say effortless, but I want to say it's very clear to see them. Mm-hmm. They're very clear to see. You don't have to force it. So that's kind of the thing where we want to have a hand in every day, every week, every stock that's moving. And unfortunately, you can burn yourself out, you can lose perspective, and, it's just not, you can't win every hand. So you have to understand that. Yeah. But trading is very exciting, and we have a tendency to want to do that.
So I'm curious on, first off, thank you for sharing. And I want to know, and before you go forward, because this is up to the mic conversation, right? This is where we're at now.
Right.
So before you go past that and where you're at today, and I want to know what were your major takeaways? Did you make any changes? Like what changes have you made to make sure that you can move forward and not make that again?
Well, I'm trying to be more patient because before I was trading like pretty much every single day, like, looking pre-market for a stock running and I'm ready to get involved in it. And just more like sitting back and waiting for like the best plays and not oversizing, taking a position. If it's wrong, cut it, just get out, because when you catch the winner, you'll make up for those little cuts. But if you try to force these trades that aren't working, then you just really get hurt. So you got to protect yourself when the best setups aren't there, and just wait, just be more patient, smaller size until you catch a winner. And then you can add size on it as long as it's working in your direction. So those are the things I'm working on. Those are the three things really: is stubbornness and oversizing, and then it's a kind of staying away from the really micro caps that could really hurt you with any type of significant size. So,
is there anything that you've done specifically in regards to those three things that you're focused on? And I mean, for example, like, is there like certain steps or criteria you now want to make sure is hit to make sure that you are being patient, making sure you are waiting for that A++ setup, if you will? Or is it more of a feel thing? Where are you at there?
a lot of it's feel, but I'm doing my best to kind of scale in and not just kind of, take a position. If it's not working, just don't add to the loser, right? Mm-hmm. So just take a small position and only add if it's going in your direction. So that's kind of what I'm doing now to prevent. And it's hard. I mean, you see something and you're like, okay, this is, but you never know. You never know when you start scaling in as it's going up, if it's going to be the top or not. It might be. It's probably a high probability of it, but if it turns and starts squeezing, so it's.
Are you now more so focused on, have you thought about more so waiting on the back end, like waiting for that obvious aha moment, or are you still do you enjoy shorting the front side?
Well, ideally, I mean, that's where you want to be, is the front side. You never know. I mean, you want to look for like the lower highs and lower lows, obviously, the back side of that trade. I mean, obviously the higher, the closer you get to the beginning of that point is better, but yeah, so it's better to be a little bit late than too early. And I know that I have a tendency to see something that I think is going to happen, but it may not. It may be in the next day when it happens. Mm-hmm. But in that one period, that 1 day period, there's a lot that can happen that can hurt you. And so that's another thing too that I'm trying to do my best, is to wait for that backside, wait for the confirmation.
So when I say that, because what I've noticed in myself is when I'm trading, the majority of my losses at the beginning were all pre-market, because I had that anxiety, like I don't want to miss this run, right? Like it's up, gapping up, X percentage, doesn't even matter, right? It's just gapping up, and I was just like, oh my God, I know how this chart's going to end up. And I'd be right maybe an hour later, maybe a day later, but if I shorted right there, I always took losses. And so like for me, I just completely, and I say completely, like it's an ongoing growth, but I'll go months with now ever placing a pre-market trade. And then sometimes like this week, I placed 2 pre-market trades, and I completely covered right when I got in, I covered right away, just because I knew I broke a rule. So like I've implemented for myself, like just never trading ever pre-market, because every time I do, even when I take paper cuts, I agree with you when you were saying you can take paper cuts along the way up, because when you're right, yes, you'll make it all back. But the other side of that story is your mental capital. I mean, when you're taking paper cuts all the way up, it's easy to flip that switch and to be in a revenge mode and not see the play, or to be in fear mode and not take advantage of the play when it really hits and you're going to go your full size, right? So in theory, that sounds great. And I agree with you. I've been on that boat for a long time, for years, where I would short all the time, take paper cut. And then I'd be right and take half size, or something like that, because I was so just effed up in the head. And so I would beg to say, sometimes it could be, and just vibing off each other, you let me know. Sometimes I would say that it could be, for me and my stats, I saw as more beneficial to be late, like you said, because if I'm late, but I have like a high odds, right? Like for instance, give a pure example. We see a stock that runs up from 1 to 5, right? We're excited. we could be shorting that along the way up, but we don't really know where the top is.
Mm-hmm.
But then we see a drop from 5 to 475, 480, 450, and we see some volume and we get excited. So we maybe want to short because we're thinking that that's the top. And then it breaks 5. But that's where you start to get in that fight. But if you wait until 5, is the top and it's clear where you see it hit 480 and then try to bounce and then break that new 450 and go lower, it sucks because in our head, you and me, I think you and I are the same in terms of we want to get that high average. We want to get that best entry because if we get that best entry, we feel like a badass, like it feels good. And so what I've learned though is, yeah, it feels good, but like if I can get in at 450 and now my odds are telling me that I'm like 90% going to be right? Because I've seen everything and there's still another $1, $2 downside. Well, I can load up and instead of taking all those paper cuts that may add up to, let's say, for instance, 1R is one risk, one R that you're able to risk on per trade. Let's say each paper cut adds up to 1.5 R. Well, that sucks because now you've already lost so much. Instead, if you reserve all that and if you know you're willing to take a little bit more loss, then increase your risk a little bit when it's not guaranteed, sorry, but when you have a higher odds probability and you feel more confident, then you can maybe load up 1.5 size if you want, or just a little bigger and then ride it out and make a killing. Your thoughts on that?
I mean, usually, these things will continue to fade for several days afterwards, and there's plenty of downside to catch. So, it's just that FOMO, I guess, and everybody sees it.
Real.
So, like, you're shorting it, and so is everybody else, and then it just spikes, and so once everybody loses interest, and you look back at these things the next day or the day after, a couple days later, and they're still fading, and you're like, oh man, so you just it's all about that patience and kind of waiting for the best time, and because it always, yeah.
And Phil Goediger, who you name dropped, I highly respect him because I rewatched his little presentation he did years ago at a conference. I'm sure you've seen it too, where he talks about how he was taking so many losses and then he just stuck with only this couple of setups, this one pattern. And anyway, long story short, he also, like, number one, I respect the guy a lot. He's a great trader. But number two, I also think what he mentions and what I took away from that is he realized over years of looking at his trades that only a select few really made his year. And so what he really did was just wean out all of the FOMO is really what you're trying to do. And so FOMO is really hard to get rid of, but man, I bet you, I mean, I know you know this, man. You found your consistency. You know what you're good at. And I'm pretty shocked that you stopped doing longing when you found success there completely.
Well,
right?
Well, I don't know. Like, I mean, I think I may have been more profitable shorting. I mean, the cost of shorting is expensive with the borrow fees and the overnight margin interest and just all that stuff can really add up. Like, I was pretty shocked last year when I looked at how much I paid. I was like, wow, that's a lot of money. So that stuff can really add up. But, when you see a chart and you see the news and you see everything, you're like, wow, this thing is a great short opportunity. Like, it's to me, it's just another tool in your toolbox. Like, you can go long as well, but you can go short too. Some people do one or the other, and they all do one or they all do. I just think that if you can do both, why not? If you can learn how to do both. So I'm still learning. I'm still trying to grow and become better. And every setback I've had, has taught me something, and I go forward and just do better out of it. But it's a constant learning process. It's a constant journey.
So I saw you posted just recently, right, on Twitter, that you were saying that you were going to take a break from Twitter. Now, I have my own assumptions, but I want to hear from you because I don't want to assume, right, because I'm going to be an ass. So tell me, why are you taking a break? Because I feel
like, I don't know. I think in some ways I'm addicted to Twitter because I'm just always on there, right? Mm-hmm. And you can see everybody's commentary, and a lot of it's in the past couple of weeks been very negative, into the world type stuff. And that stuff can start to, affect your mental capacity in some way, make you think negatively or just mess up your calm, being able to see things clearly. And I don't want to, so if I feel like something's doing that to me, I was like, okay, I got to step back. I'm not seeing things right. I'm doing I'm just not feeling right. My mindset's not in the right place. And if your mindset's not in the right place, you're not going to be able to see the market action and act accordingly to what it's telling you. So that was the main thing. It was almost like I was always on Twitter. Like I felt like an addiction kind of thing. And
Yeah.
so
I
that's
understand.
the thing. So I mean, I'm still on there, but I'm still trying to like not be on there as much during the day because it's just information overload, I think.
I have found that Twitter is more of a negative than a positive for me in terms of trading and consist. Like whenever I found my consistency is whenever I completely eliminated Twitter, and then I came back to Twitter, and then I kind of fell off a little bit, and then I kind of just took it away, and I came back, and then now I've kind of found a balance where I just don't really read Twitter. I just tweet. I don't read. Does that make sense? Like I kind of just like tweet, and then I don't look, because if I look at anybody's comments like that are negative, or if I look at, because I'm still young in my trading too, where in terms, if I see Tim Grittani tweet something that's completely opposite of me, I may still be affected by that, and I like to think I wouldn't be because I'm a different trader now. But back in the day, man, if you said something different, I didn't even know who you were, and I was in a stock and I was in a great position, I would just cover. And I would, and that right there is Twitter. It can be so negative because number one, I mean, not only me, I know other traders who've recently said that they were kind of upset that with themselves because they were always looking for that Twitter high where they would get all these wins and they post it, and then they take a big loss. And I'm telling you, more times than not, usually when I take a loss, it doesn't have to be big, small, whatever. But usually when I take a loss, it's right after I go to my wife and I'm like, hey, babe, I just had a fucking awesome day. It's like, you know what I'm saying? Like, I just had a great day. And she's like, stay humble. And I'm like, I know but I got to celebrate. And so what I've recognized for myself.
That's where you got to take some money out, man. That's another big thing too. You have a big win, take half of it out, throw it somewhere where you can't lose it, because all the money that I've won is the money that I still have is the money I took out and did something else with. So if it's in there, you're going to use it. So make sure you pay yourself and don't, that's a really big thing. It's a really big, especially after you're having some serious wins, because that's real money, right? Looks like ticker, just numbers on a screen, but it's real, it's real money. So you have to remember that.
One thing that maybe you're doing this, and if not, I'm going to share with you. It's helped me a lot. And that is like, if I take a loss now, I immediately downsize on the next trade. And if I take a loss on that one, I downsize a little more. And then when I take a win, I up it back. And I up it back. It's just like that right there alone has helped me, dude. Dude, Scott, it helped me tremendously in my trading because, if we're wrong on one trade and, I have a max loss for the day. Let's say my max loss is 4R and I risk 1R per trade. Well, if I risk 1R in this trade, then I only get 3 more shots. But if I risk 1R, lose it, and then I risk half a R the next trade, I still have plenty of shots. And if I win on that one, then I make that and some back. So now I'm profitable on the day because you're looking for 3R. So at the end of the day, that's really helped me. I don't know if you kind of play with that kind of stuff, but I just thought I'd share that with you because it's really helped me a lot.
Yeah, that's something for me to really consider. Yeah.
Because the biggest thing is my mental game, right? I mean, because if I take one loss and then another loss, then I'm just literally like it's inevitable. Like I know eventually it's going to get to that point where I'm no longer thinking like a trader.
No, you go on tilt is what it is.
Yeah.
And you just start doing stupid stuff and way off of anything that makes, good trading logic sense.
Yeah, it's the opposite because everyone else every time I take a loss, most of them, and I fell into this so many times where I would increase my next position to make it back and then I lose more. And now it's like the opposite. It's like the longer I've traded, the more I realize what really risk management is. And that is understanding yourself, where you're at, how you're trading in the moment, and then calculating that with the odds of the play along with your size. And so if I took a loss, maybe this trade I normally would take 1,000 shares, but on this time, because I took a loss in the past trade and my mental capacity is kind of F because of this whole week has been choppy, I may take 500 shares, 250, just to get that confidence and slowly grow. So it's weird how, as a trader, when you grow, the opposite is for me at least,
Yeah.
is more beneficial than what you think you should do, or like the knee-jerk reaction.
So Alex, how long have you been trading?
So I've been trading for about 3.5, 4 years. I would say gambling the first year.
Okay.
I would say gambling because I had a great career, man, and I'm crazy because I left it with no experience in trading, by the way. I left it and just gambled it away and had to go back to work and then saved up another 12 months of salary and then left it, failed, came back to work. Like I went through a journey, man, and I've shared it all over my podcast. So you ever get a chance to go listen to that?
I gotta go listen to your backstory, man.
Yeah, man. I don't want to take it up all on this show because we only got about 4 more minutes left, but definitely listen to that because I know it's rough, man. I've been through what you're going through. I know what it's like to make good money and make nothing. I know what it's like to make a ton of money and lose it all. Like I also know what has helped me today, and that is I don't look at P&L. All I think about is R, like we were talking about. And all I think about is really just being self-aware. And that's why I really love what you were saying, just sharing your thoughts, because I talk out loud to go through my thoughts. And the more I talk about it, the more I start to recognize, like you said, there's patterns in what you make your mistakes. And my biggest pattern for the longest time, man, I would have like 3 months of just ridiculous, like everyday green, every day, just straight. Yeah. And then I would have one day that it might not destroy everything, but it might be the start. And then boom, I would just lose it all in a matter of like a week. And so I would do that over and over and over. And it just took me looking at all my trades to realize that it was a lot of things, right? It's not just one thing, but like one of the major things was eliminate all of my losers, which were all longs. I just eliminate all the longs, right? And then the other thing was revenge trading. I had a horrible time with always trying to make my money back. Yeah. And so now I went through a period where I didn't go and look at my P&L for a month straight, Scott. A month straight. I didn't even look at it. I didn't even upload it. I didn't put it on TraderView, nothing. All I did was trade. And I did that for a month. Dude, I'm telling you, it changes how you trade, and you will see yourself as a whole different trader. And you'll be like, holy crap, like I can definitely see the difference between when I was over there looking at P&L and where I am now. If you do it for a day, you're not going to get benefits. If you do it for a week, you may feel a little bit, but do it for a month, and I'm telling you, you'll be like, what the hell's happening? So, and the other thing I did was take a whole week off voluntarily. And I've had weeks where I didn't trade because I had to not trade, like because I was out traveling or somewhere. But I'm talking about where I was here at my computer, had nothing else to do, and had a whole week where I just sat here and I didn't even open anything on trading. I didn't open anything. I didn't look at Twitter. I didn't look at anything regarding charts. I ignored it all because I was in a weird mindset where I was constantly, every time right before I sat at my desk, I started to feel, everyone's different, but for me, I was feeling some kind of anxiety or some kind of like fear or something like a weird negative thought back here. I don't know what it was, but it always was there before I trade. And then when I voluntarily took a week off, I think it was FOMO, because when I took that week off, I had hard FOMO, man. It was like, holy crap, I'm taking a week off and I can trade, like this is stupid. But after I took that week off, I came back the following week and it was so different. It was like so clear. I was so patient, and knock on wood, I've been patient ever since. Like it's just way different. And when you get that clear headed, when you start to dip back down the other way, because it happens, like me, I talked about it last week. I was dipping down the wrong way of getting a little greedy, trying to get FOMO. FOMO was coming in, that you recognize it a lot quicker because you're kind of clean, if that makes sense.
Yeah, you kind of like slowly drift down and you don't see it happening. And then, you take some time off and you get your mind straight and like, wow, I didn't realize how far, outfield I was, so it is important, and it's hard to do because it is, the trading is far too exciting. You have to force yourself because there is always opportunity. And, same thing with me. Like I would find myself shorting something overnight and I'm always, worried it's going to gap up the next day on me. And so it was just like a constant cycle of just, always being in a trade and never, just never taking a break. That was a big thing too.
The thing you said about So that's the other thing I stopped doing. I don't hold overnight anymore because that's all my big losses were that. And it's just something, I mean, in the stress, dude, even though I felt confident and I held it overnight, I still be looking at that damn thing all day. And I'm like, I don't want to live like this. I don't want to be
No.
out with my friends or with my wife and then constantly having the stress of like, what if they release PR? What if it spikes
Yep.
out of nowhere? Even though it looks like a beautiful chart and I'm right, but what if? And then those times where that what if is true, you're like, you lose just your mental
Well,
game's messed up, everything.
you got to ask yourself, like, I mean, is that really living if all your free time is consumed with
Yeah,
anxiety from trading? And, you know, it's really not. I mean,
right.
that's no way to live. I mean, you trade so that you can have freedom to do other stuff, not just to be constantly being absorbed by it 24/7. You know, that's not a healthy way. So that was a cycle with me too. It's,
Yeah,
you know, it's just what we traders have to go through. So,
absolutely. Well, let me ask you this, man. I want to ask you two questions before we wrap this up. Number one is, if you can give yourself one piece of advice, if you can go back in time when you first started trading your first year, if you can go back and say, Scott, this is what you need to do, what would you tell yourself?
just wait for the trade.
All right.
When the trade comes, it's so clear. I mean, you don't know 100% you're going to make money on it. But when you look at the chart and you look at everything, it all lines up. Everything's in your favor. It's easy.
Yep. It's almost like a slap in the face.
And it doesn't happen every day, but it happens enough to where, you know, maybe once a month or whatever, there's always this beautiful trade. And you're like, you just start salivating. It's a perfect trade.
Yeah.
But that's a big thing. You said two things or just one?
Well, the second thing, no, just two questions, right? So the second question is, if there's anyone, I know you're taking a break from Twitter right now, but if there's anyone who wants to reach out to you, have any questions, maybe they're going through something similar, how would they be able to reach you and when?
Yeah, so I'm back on Twitter. I did one day, and that's about as much as I can handle. So I went back on there and started posting some charts and stuff. But I'm not really sitting on it all day. But Twitter, you can reach out to me on Twitter. And I've had a bunch of people reach out to me after, you know, the Codex. And I talked to a bunch of traders and they shared similar stories. So I call them up, talk to them. And, you know, I don't know if it's like therapy. To me, it's like therapy.
Yeah.
Because not a lot of people understand what traders go through. I mean, it's kind of a very unique thing that we do. And so being able to talk to somebody else who's been through it, who understands, that's a big thing. And to me, it's like a therapy session, even though you're talking to another person, you connect. To me, it's been very helpful. So I invite anybody who's struggling or wants to talk, reach out to me, and I'll be willing to talk to you because I've been through it. I understand, and you know, I like to connect with other traders. So
Perfect. Well, Scott, look, man, again, thank you for being here today. Thank you for talking with me and the listeners. And I appreciate you sharing your story. And I wish you the best. And hopefully, maybe in the future, we get you back on the show and see where things are at, my man.
definitely, Alex, I really appreciate it, and you have a fantastic weekend. And best of luck trading.